In this presentation, we will put together a statement of activities within Excel. We're going to take this information from the trial balance on the left-hand side and put that into the blue area on the right-hand side in the statement of activities. Information on the left side is in the form of a trial balance. Now, this is going to be a partial trial balance because, in essence, we're just focusing in on the temporary accounts, the accounts that would be thought of as basically income statement type of accounts if it were a for-profit type of organization. We do have debit and credit format, debits being positive, credits being negative, and we've made something that is in balance so that we can get an idea of these type of accounts, a better idea by looking at a trial balance that at least is in balance here. So we've got cash up top, balance sheet account, vouchers payable, liability type account, and then we've got the fund balances. This is going to be an equity type of account. And then we have the accounts that we're basically concentrating on here, the temporary type of accounts that we're going to use to create our statement of activities. These would be what we would think of as income statement type of accounts for a for-profit type of organization, temporary accounts here. In other words, income statement accounts are a form of temporary account on a for-profit organization. We can just call these temporary accounts income statement type of accounts for the governmental accounting. Note the structure of these accounts, so it's going to help us to break this out. We have the grouping of the revenue accounts, and then in the activity, the interest on long-term debt. We've got the general revenues account and then what it is, and then we have the grouping of the program revenues. It's under the category of culture and recreation, and then the charges for what they are. So we've got the program revenues, and then in the grouping of general government, charges, program revenues, and the grouping of general government, and then operating grants, and so on and so forth. Revenue accounts being in the credit balances because they're going to be type of revenue type of accounts. If we scroll all the way down, then we got the expenses. So we have expenses here for culture and recreation. Notice that we're using the term expenses instead of expenditures because right now we're looking at the government-wide activity rather than a typical fund type of activity where we might see expenditure. So this is on an accrual, in other words, instead of the modified accrual. And we have the expenses for the general government, the expenses, health and sanitation, and so on. So we're going to put together then our statement of activities. So we're going to put up top, we're going to say primary government, and then we're going to add our categories that we're going to include here. And you can see them in the groupings to the left. So we got the general governmental information. So general governmental, we got public safety, we've got the health and welfare, and we're going to have the culture and recreation. So we're going to include these groupings to the right side. So I'm going to say general government, and then we're going to have public safety. So these are going to be our categories: general governmental, public safety, health, sanitation, culture and recreation, interest on the long-term debt. That's going to give us our total governmental activities. Now what we're going to do is what we would probably expect comparing basically our revenue and our expense type of accounts. What we might not expect is that we're going to start with the expenses on the left, and then we're typically going to put the revenue on the right, and then do our comparison in this format. So we're actually going to be having our line item of general governmental. Within general governmental, you would think that we would be comparing the expense item down here with the revenue item up top, and we will be doing that. We're just going to start off with the expense first, and that's going to be the general format. So I'm going to pick up all of the accounts that are going to be in this trial balance. Once we have done so, we should be able to tie out to this number. So notice this is debits minus the credits, or it's going to be the revenue type of accounts, not including the balance sheet accounts, temporary accounts, minus the expense accounts. So debits minus the credits, we're going to come up to this number. If we find a home for all of these blue items, we should come up to that number. So let's do that now. So cell E7, we're going to start with E7, governmental on the expense side, and that is going to be equal to this 9834. That's the governmental expense line item. I'm going to carry this across, so now we're going to compare that to the income item. First, let's put a little yellow dot here. I'm going to find a home for all of these items. Right click, I'm going to put a yellow square right next to it, and that'll show us that we found a home for this one. Now on the revenue side, we've got the 3,280 for the governmental on the revenue. I need to flip the sign. That's a negative. I want to make it a positive, so instead of putting equals, I'm going to say negative of this number. So negative of the 3280 takes that number, flips the sign. I'm going to put a red or a square there, yellow. It's yellow. And then we're going to go to the grants. item equals negative. I'm going to put a negative, and then that's going to be for the grants. This item on the 931, found a home for that one. Right click and make that yellow. And then the last item is capital grants. We don't have any here. So what we're going to do now is we're going to take the net expenses, revenue, and changes in net assets. In other words, we're going to take the revenue items, kind of these items, minus the expenses. So in a formula, that would then be equals the sum of the revenue type items, this, and this, closing up the brackets, minus, and then we're going to take this 9830, enter. So the revenue minus the expenses. We'll do the same thing for the public safety. So within public safety, we're going to start with the expenses in E8, and that's going to be equal to, and then we'll scroll down. We're looking for the expenses in public safety, which is this 35,612. We're going to say enter. The next item we're going to have is going to be the revenue. Before we do that, though, let's make this yellow. Right-clicking on it, we're going to make that yellow. We found a home for it. Then we're in the changes for services. I'm going to make this a positive number by flipping the sign by saying negative instead of equals of, and then we're scrolling back over and we're looking for this item for the, we're looking for not that item, this one. We want the public safety, that's the one, and enter, and we'll make that yellow. So we found a home for that one. And then we have any, that's going to be the service charges, operating grants, and we're going to say that that's going to be the 1405, so this one, and we'll make that yellow. So we'll say that's yellow. And then this one actually has capital grant as well. So I'm going to go back over here and say we have a capital grant as well for this item, negative of this number. So we pick that up, make this yellow. So I'm going to make this yellow, right click and yellow it. And then we'll copy this formula down. I'll put my cursor on there, autofill this down, which in essence is just taking the same formula. So these three minus the expense. Okay, so the next item that we're going to have, expenses for health and sanitation, equal to, if we scroll back down, health and sanitation, that's the one we want. That's going to be this item, 7016, enter. Then we're looking for the charges. Let's go ahead and make this yellow first. So I'll right click on it, make that yellow. Then we're looking for the service charges. I'm going to put, and then we want to scroll down and pick up this 5796. So health and sanitation and enter. Then we'll go ahead and make this yellow, right click and make that yellow. And that's all we have. That we only have that one line item there. So, and we'll do the sum, I'll sum up the totals later. Let's look for the culture and recreation. This is going to be equal to, if we scroll back down, we've got the culture and recreation, which is the 12,670. And then we'll take a look at the revenue item. I'm going to say negative of this number. We're looking for culture and recreation. We want to pick up the 4146 and enter. Then we'll make that yellow. So that one is yellow. And then we have the operating grants. Again, negative of. We're going to scroll over to the operating grants, the 2570, and enter. So there we have that. We're going to make that yellow. And that's all we have for that column, or those items. And then we have the interest on long-term debt, which is going to be equal to, scrolling down, the interest on long-term debt. This item, we're going to make that yellow. And that's what we have so far. So I'm going to go ahead and copy this formula down. So I'm going to copy this down. These are our totals. And that's once again taking of the revenues minus the expenses. So that's our net expense. If it's bracketed, it's expense, revenue, and changes in net assets. So there's we have these items. Now let's pick up our totals, which are going to be the sum of the columns. So I'll sum up the columns. I'm going to copy that across. I'm going to put my cursor here and just autofill that across, copying that relative formula across. Here's our sum up balance here. We could double check that number because it should be the same as equals the sum of what we've been doing this whole time, these minus the expenses. And we get that same number as a double check. Notice what that number is not, however. It's not this number, which we expect to get to. Why? Because we got these other accounts that are still haven't found a home. We haven't found a home for the special items, for the expenses for culture and recreation and for these general revenues up top. And actually, we have found this one. So this one does have a home. So we put that one there. So we don't have a home for the special items here and the general revenues up top. So we're going to add those items into the bottom portion, the bottom section of our statement of activities. So we're going to add a section for general revenues. I put general revenues and then a colon. That's going to be picking up then these items up top, these 3 general revenue type of items. And those general revenue items include property taxes, unrestricted grants, and investment earnings. So here are the 3 line items. We're not going to put them into a particular group. We're going to just put them into the outer section here. So in the outer column, I'm going to flip the sign. These are revenue accounts. We need to make them positive numbers. So I'm going to say negative of instead of equals this. We need the 57,497. Then I'm going to say negative of, and we're going to pick up the 1295, and finally negative of, and we're going to pick up the 2069. And so now we have found a home for these 3 items. I'm going to right click and make those yellow. We'll put a subcategory here, which is going to be total general earnings. Make that a capital. We'll sum these up equals the sum of these 3 items. So now we're still off by this item here. We haven't found a home for. So this is going to be gain on sale. So we're going to say gain on sale, and then we're going to include that here. And I'm going to say that's negative of this item. It's a gain, so we need to flip the sign because it's a credit. We need to make it a positive. So there is our special item. And then we have the totals. So we got the total, general revenue, and special items. And I'm just going to sum up these 2 items now. We can make this one yellow. We can make that yellow. Sum up these 2 items. We now found a home for everything, so we should just be able to categorize things correctly and be able to have this work for us. And we should be able to calculate what we'll call the change in net position, which you could basically think of as net income. That's going to be our bottom line number for our temporary accounts, and that's going to be equal to the 51,901 up top plus this 64,475, and that'll give us to our 12,575. So once we found a home for all these items, then we should be able to just tie them out and make sure that we have our debits and credits going the right way, make sure that our math's going the right way, and it has to work at that point. Now, at the last components, we're going to have the beginning net position, this being like the equity balance. So we're tying this out to basically kind of like the balance sheet account, the equity balance. So the beginning net position in our example was this, 1747. I'm going to flip the sign by putting a negative in front of it. And that gives us an ending position. And that's going to give us the ending position here, which is just going to be equal to the sum of these 2 items. And that's the 14,322. So you can see this last component is basically saying this is our balance, assets minus liabilities, the equity section. You could think of it if it was for profit at the beginning. And so this is going to be our net position on the balance sheet, kind of the equity section. You would think of it for a for-profit on the ending balance. And it's the same as for an income statement. If we were to find a home for all the temporary accounts here, if it was a for-profit income statement, that would be in essence our net income, all the temporary accounts, which will then roll over or close out to the equity accounts, which in this case is the fund balance account. And that's going to be this 1747. So this fund balance then is the fund balance at the end of last year, which is the fund balance for the beginning of this year. And therefore, if we were to add all these up, this would be the total equity, the 14,322, just as we would see in a normal kind of trial balance. And of course, that's the same as assets, which we only have cash and vouchers payable, just to see something that's in balance. Assets minus liabilities is, of course, that same 14,322. So this is kind of our mini balance sheet, right? Assets, all we have is cash. Liabilities, all we have is this voucher payable. Assets minus liabilities equals all the blue items, which in essence are all the equity items, the beginning equity balance or fund balance or net position balance, assets minus liabilities balance, plus the activity that happened, revenue minus revenue minus expenses, the temporary accounts, the income statement type of accounts for a for-profit is going to be equal. So assets minus liabilities equals the net position, the fund balance, the prior fund balance plus all the activity that happened during the current period.